Hey friends, if you want to learn how to make money in the currency market, you should pay attention to the 2 stochastic strategy. In this video, I'll conduct my next trading session and show you how to apply this strategy in practice. Just a reminder, this is the most accurate strategy among those I use. You can look for separate episodes about it on my channel, just so you know. Well, or you can find them with short links in the private channel. So, at the beginning, I want to remind you that the link with the 50% bonus parameter will be in the description below the video. So, let's connect this indicator. We double click on it, and after that, 2 identical stochastics appear on the chart. For the first one, we change this value to 5. For the second filtering stochastic, we change this value to 20. It filters out all the noise from the main one. But now, a little bit of information for beginners. How do we make trades using this strategy? Let's watch and listen carefully. A buy trade is made when both stochastics either break through or bounce off the 20 zone at the same time. The price accordingly started to rise. A sell trade is made when both stochastics do the same thing, either breaking through or bouncing off the 80 zone. Here's the 80 zone. And in this case, we see that price went down. The idea is for both stochastics to show the same signal. If the fast one outpaces the slow one too much, the direction might be incorrect and the market could be noisy or corrective. The similarity in their movement affects signal quality. If the fast one significantly outpaces the filtering one, then yes, the overall direction might not be guessed correctly, but the market will likely be very noisy or go into corrections. And in fact, it is this similarity of the movement of both stochastics that influences the quality of the signals. If you want the clearest signals, then you should expect the breakouts to be as identical as possible. So right now, I'm going to quickly go through the assets, find a suitable one, and start my trading from there. Well, let's say the British pound against the yen. On the 1-minute chart, there's already a signal, and on the half-minute time frame, the situation is the same. The signal is already being executed. Now let's take a look at the 2-minute chart. Here, the filtering stochastic hasn't reached the 80 zone yet, but since I'm trading on the 1-minute charts, my priority is the 1-minute and half-minute time frames, and judging by them, I can confidently make a trade. The trade is ending. 0, 0 meaning a return, but to be honest, it's not bad either. After all, it's not a loss. What just happened here? Looking at the stochastics, we can see that the signal is still there. Perhaps I came in a little late, and this candle seemed to make a false jump upward. But in any case, the stochastics are still showing a signal. And since the price has gone up, this is the best moment to make a trade. But still, we managed to take our share, and in the end, we worked the situation out for a profit. The breakout of the main one, the breakout of the filtering one, the second one has stalled a bit, but that's understandable because of the sideways movement, meaning the price started to bounce around in place. Well, I caught a really good peak from which the decline started. So here the decline has already started. There's a breakout on the main one, and there's one on the filtering one too. Yes, the filtering one is still tied to this candle, but I think the decline will be active, since the price has already started to drop from the peak. The trade is ending in profit. All the signals are there, both on the main and the filtering ones. But on the second one, the breakout is a bit late. Alright, I'll be looking for the next entry point. Although it looks like I won't have to search after all, I found a suitable asset on my own. And it seems that, just like in the first situation, the pass-through is high here. Why? Let me explain. On the half-minute time frame, the stochastics have broken through the 80 zone and are heading down, just like on the 1-minute chart. And here it's all the same, even clearer. And that's a really good confirmation that the price is going to drop. So I'm making a deal to go short. Another trade is ending in profit. Let's take a closer look at the situation. Here are the 80 zones that the stochastics were supposed to break through or bounce off. So, the stochastics are showing those signals, and based on that, the price on the chart has started to go down. Also, there are clear PS zones that stand out here. There's a line at the top and at the bottom. In this channel, the price jumps from one zone to another, and in channels like this, the strategy works best. One thing that stands out is that the stochastics and the chart are moving in the same direction, which potentially increases the likelihood of a trade. But the signals are already there, and since the price has gone up, this is the perfect spot to make a trade. The trade ends up in profit. It's interesting how that turned out. Usually this kind of thing can happen on higher time frames. For those who didn't understand, there was a 1 second jump downwards, which wasn't even shown by the 1 minute TF. So, I found a good asset, and 2 stochastics have already broken out and moved out of the 20 zone, and the price has risen quite nicely according to them. So, to keep it short, I'm going to jump in here with $200 for a call option. And so the trade ends up in profit, adding another $180 to the account, which now stands at $29,800. Everything is pretty clear here. The stochastics are moving in sync with the price on the chart, and this is basically a textbook situation that you should take as an example for yourself. You can even see how the price is moving in a clear channel, with a defined zone at the top and at the bottom, and the channel itself is not narrow. It doesn't have every candle jumping back and forth. Overall, these kinds of situations are just perfect for this strategy. Well, I'm going to withdraw some of my money. I don't like to keep too much in there. On the other hand, there was an idea to say grow from 30k to about 50k. I don't know yet, it's just thoughts for now, but if I decide, I'll definitely let you know. So I'm withdrawing 2.5 and hitting the button. The request has been processed. By the way, I paid plus or minus $1,000 for this vehicle. Usually I make less because I bet $100 per trade. Today, as you might have noticed, I was betting $200. Well, why not, if it doesn't affect the risks at all? Today, as you might have noticed, I was betting $200. Well, why not, if it doesn't affect the risks at all? Let's summarize and wrap things up. Signal similarity affects trade quality. Avoid trends. Sideways markets with effective signals boost success. If they're exactly identical, the success rate increases. The second thing to consider is the sideways market. The strategy doesn't work well in a trend. But if there's a clear sideways market with obvious support and resistance zones, and if the historical signals have been effective, then of course, the success rate of the trades will be higher. Track shorter time frames. If there's a downtrend signal, stochastics break the zone. On shorter time frames, stochastics are further apart, but the overall picture remains, impacting trade success. These tips can increase trade success with this strategy. It's not exactly the same, of course, because on the shorter time frame, the stochastics will be further apart, but the overall picture will be the same, and that really has a huge impact on the success rate of the trades. Basically, these are my main life hacks that you can use to increase the success rate of trades with this strategy. Use it for free, teach yourself, and leave feedback.